We're live, guys. Say hi to YouTube.
Hello, YouTube.
Hanging
Welcome
out.
to Bullish Bears, where we give you the dish. Remember to like, subscribe, and ring that bell.
You called it a pentagon.
Yeah. Well, in the middle, I was like, there's a pentagon in the middle, so that means...
Now it's a pentagram, so... Oh, hey.
Well, I mean, a pentagon is in the middle of a pentagram.
There you go. Yeah, I put one up there for you.
Yeah, there we go. It's
That's
a me,
right.
That's a Luigi.
Since, hey, Magumba, huh?
Oh, he's rising. Light as a feather, stiff as a board. Light as a feather, stiff as a board. It's a me, Luigi.
That's a Luigi board.
A Luigi board.
Whoa.
Jeez.
I had to reply to some emails later. Okay.
Uh-oh.
All right, so we almost closed. We almost
scare
closed
me.
the gap, man. We almost closed the gap. You know, kids, we used to play with this Ouija board stuff. The question I always had is like, who was moving my hand?
Oh, man.
Do you dare?
I only played it that were doors involved.
Oh, I just heard Dr. Claw.
Morning, guys.
Dr. Claw.
Good
Dang, I haven't
morning,
heard that in a while.
Ricardo. I don't know if you want to be here. It's crazy in here right now, man.
I'm just hearing you guys are having way too much fun.
We are.
It is.
We are.
It is Friday, man. You know, like if you made your money, you made your money. If you didn't make your money, then just wait until next week.
That's right.
Well, I'm preaching price action, and that's why I say your RME. I can't help it. Recognize what you're looking for.
Oh,
Measure
gosh.
your move, calculate your entries, your stop loss and your exits, and whatever take profit, and then execute your trade. It's three things that you can remember: A, B, C, and then you go look at that little stuff I put together. You get 1, 2, 3 for each one, and if you just put that little framework, that little model, it doesn't matter what you do, what your strategies are. You just use that little model. You got to recognize what you're looking for. And then you got to know what the hell you're doing. You got to make your measured move, get your targets and everything set. You got to know that stuff yourself. And then you execute your trade and you manage it, bring it home. It's three for me. It's I have to keep things simple, Stone, unless there's more.
Oh, man. Sorry, I'm
preaching.
Keep it simple, Stone.
I'm the price action preacher.
I just got a response on Robinhood support from something I was asking them, and it is ludicrous what the response is. Doesn't even have anything to do with what I was asking them. So there's
Really?
their awesome support for you. Just to
Wow.
yeah.
You know, someone else that has like a terrible support? Facebook Marketplace, man.
Oof, yeah. I don't.
So in the middle of the pandemic stuff, right? So like my wife got pregnant, so we weren't using our our Peloton bike anymore.
Mhm.
And she says, let's sell this thing. So I posted for like $1,800 on Facebook Marketplace. Within 5 minutes, it was sold. Right? I had people send me money via the Facebook app, which I've never signed up for. Right? So I couldn't receive that. So I had 3 people send me money on that, and I had this one guy contact me and call me and say, "Hey, I'm coming pick it up in the next half hour, cash." And I'm like, "Sold, done," So within a half hour, the guy was there. He picked up the bike, and then those other 3 people complained to Facebook that I sold a product and that I took their money. And I'm like, "I never took the money, man."
Yeah.
So I had to show Facebook's bank statements that I never received the money in any one of my accounts, which none of them were linked with Facebook. And they ended up ruling against me that I broke their policies and blocked me from selling and buying anything on Facebook Marketplace.
Jeez.
So I'm like,
Yeah,
what the?
that's. I would. Yeah.
So then I just, I basically just said, screw you, Facebook. I'm not gonna look at you anymore.
Yep.
I recently suspended both my accounts with Meta. I'm like this sounds like a good New Year's resolution to me.
Mm-hmm. Absolutely.
And it's
No,
funny because I like doing those little reels,
I've sold some
Like-
stuff on Facebook Marketplace before, but in everything I put in, I block. There's a thing you can go and block, Facebook payments or Venmo and all that crap.
Uh huh.
On my ads, anytime I'm selling something, I put these words. I'm not a religious man, but I put these words on there. In God I trust, all others pay cash. And that
That's the
seems to do the trick. So just so you guys
Be a
know.
double top. That's a good one. Cash App. I can't stand her.
Because
Cash App.
every time I've put an item on whether it's Craigslist or Facebook or anything like that,
Grumpy old
you
traders
get
run
like
everybody.
a whole bunch of scammers trying to say, "Oh, I'll pay you double for this, and then you just wash a check for me, and I'll send my uncle Cletus to go pick it up or whatever." And it's like, dude, get bent. Bring cash. Be in person. And if you want to do something stupid, we can talk about that later.
Most of all, bring cash.
That's it. Yeah.
The thing is,
Here's Uncle
Peloton, when the pandemic stuff was going on, I mean, those guys, people were paying top dollars because they couldn't
yeah.
send any bikes, they couldn't do anything, right? I mean, they were running out of short of inventory. You couldn't find anything. So if you had the one and you're selling it, you're basically getting the money that you paid for brand new, right?
Yep. And
So I did that, and
I do. I definitely enjoyed watching that Piton price run up, but I was real quick to short it when it hit the top. Because they were having. I think in that company they were announcing that restructuring was happening before anything. They sold a lot of product. They were having a hard time maintaining inventory. And don't get me wrong, it's a great idea. It's a great concept. I love what they do. Nothing wrong with that. But the way that company was structured, it was just it was like watching a short squeeze and being ready to short it again. So I just watched how it just parabolically ran up, and the chart told me everything I need to know. But looking into the company, I'm like, well, why the hell is this going up so high? There's no reason for this much revenue to be here. And then I look at the chart tip over, and I'm like, okay, now they're talking about restructuring this, or they're laying people off or whatever. How fast did that have to happen? And then all of a sudden, it was just instantly shortable. I mean, it was the most amazing bearish trades I've ever made in my life on like Peloton, Zillow, and Roku. On the tail end of the pandemic, it was just so easy. There we go. Roll over, baby. Back to liquidity zone right there. Watch for a bounce here. If it doesn't bounce here, we get a stripe below this top of this box. We're in business for being bears. There's a little triple top here. Tesla, man, I love how they downgrade it and it just keeps climbing. Let those institutional analysts just keep chipping their teeth, man, and it's hilarious. I'm gonna start calling those guys chuckleheads.
The chucklehead.
We knew exactly where this liquidity zone was on Tesla. Just looking left on the chart. Very simple. It's been in the supply zone 4 times now. 1, 2, 3, 4. And we'll probably touch it again. If we break it this time, we can trend. And I'm a bit bullish on Tesla in the long run. I think they're going to have a surprise on Q4 earnings. That's my opinion, not financial advice. But look at how much range that thing has to go on the chart for a 50% retracement. It is in a butter zone. If it does start to trend here, it's got a lot of trend to eat up. I know that a lot of people are long-term bearish on it. I know the shorts have made billions and billions and billions of dollars shorting this. There'll be a time when, if you get one good earnings announcement or something, you might get to see what a real short squeeze looks like. Just kind of saying. It's got lots of room to retrace a bunch of that trend, and it's not like it's a stranger to doing that. Look at this. Explosive move, 100% retracement. Coming down. Explosive move, 50% retracement. I mean, the chart doesn't have to repeat, but it definitely rhymes.
Look at the 2 hour that I put in there. This is Monday's resistance, and we're testing it for support. If you look at all the wicks from yesterday and you look where we are right now with the on the 2 hour chart with the pre-market candles and this first 2 hours. That's looking pretty strong.
Oh, yeah.
1 minute, I've got the bands wanting to start to open up with the 8 above the 20.
We tipped right on top of that liquidity box. Like, quick,
I
didn't
also
even
have
touch
the
it.
15 crossing above the 20. Look out for a possible double top around 4,000.
Yeah. I can see it.
1 minute.
403.50 is the closing of the bar gap.
And we
The
can set
RTH. Yep.
a measured move pretty simply on that.
404.50 actually is right there. That's where we.
Don't do that. You still got 2 minutes on the 5 minute candle, though. You know, the last one looked bullish as all heck. And then you see what it did. So,
Yeah.
but I'm looking at the 2 hour chart and I'm going, I posted it in there. I'm thinking, man, that looks like it's testing Monday's resistance for support. And that sure is a big green candle that's going to close here in about 12 minutes, 11 and a half minutes. And it's
Amazon
got
just
to,
crazy.
or it's going to be a big wick with a big red bar on the bottom of it.
Yeah, we've seen this look before on a 15-minute chart.
Now, I love the multiple time frames.
Here's a 30-minute chart setup, so we could get the old bar spinner bar here.
Jeremy's favorite term, the structure within the structure. My favorite term, fractals.
Yes.
Yeah, you can clearly see on a 30-minute chart the turnaround. I still have phrases I have to work through. The reversal, I call it a turnaround because it reminds me of a song. But you can see on the 30-minute chart of SPY, if you go look at it, how it acted in the pre-market. And, we did get the hammers of Akbar on the 30-minute and also the 15.
Yeah. Backthar.
Akbar.
That's what they call
Thank
Did you just make a total eclipse of the heart reference? I'm just wondering.
I don't know. I just heard you yesterday and I'm parroting.
I'm like, turn around.
Oh,
Oh, Lord, lift me up.
It's funny how, we get some walks of life in here. We got mechanics and musicians, and most mechanics I know, I would say the majority of mechanics I know, they like to play guitar too. Just, pass the time, the hobby.
That's me right there, man.
And understanding a little bit about music, and then you go look at a chart and that kind of makes sense. We've got
It's like reading the score. It's like, that's where I get.
That's why I like harmonics.
Yes.
Yes, harmonics, exactly. Harmonics are great. Listen, implied volatility, implied chords,
Yep.
implied harmonics. We have all that stuff.
Oh yeah.
I look at this, it's like reading a freaking music score.
Yeah. It's pretty neat.
And once you figure out the bass line,
Yes.
then once you figure out what the bass line is doing, you got the rhythm and you got the groove. I'm pretty good with that. Drums can do whatever the hell they want as long as they stay in time.
That's right.
I just want a nice bass line to be able to follow, to give me those leading tones to let me know where I'm going. There you go.
So yeah, guys, we got we got a little bit of everything in this group, and we mix it up because we can produce different ways to look at the market and all come to the
It's
same
that's musical
conclusions.
too.
Yes, and music
Guys,
theory.
can I,
Go ahead.
You want to
Sorry.
try, Victoria? You can try.
no, nothing to do with music. I was going to ask a question, but it's literally just gone straight. Oh, that was it. Yeah. Do you guys do any trading on the weekends or anything? Because futures are open 23 hours
You
a
want
day.
to know where to invest
Well-
$1,000 right now?
We're
Who the hell said that?
I don't know what the heck that was. What we do
Sorry,
is
guys, that was me trying. That was me finding a YouTube video. of This Indian guy's beatboxing. I'm gonna share it. In a second. Yeah.
But essentially, we, you look at the futures market. It closes on Friday at 5 o'clock, and doesn't open again until Sunday at 6 o'clock. Oftentimes, you can trade an opening range breakout on that Sunday opening. I do it every now and then, but the thing is, like, I'd rather wait till that lull in the 5-6 o'clock in the morning, where you get the
So-
setups.
The futures aren't open on the weekends. That explains why I couldn't do anything last week.
Right.
Okay. Okay. All right. Question answered.
It's-
Thanks,
I
Jeremy.
have traded it on Sundays, and it's like very low volume.
Yeah.
Yeah, I get that.
It's
You
not. It's
trade
not really
futures-
worth it, to be honest.
Now,
So
you
I keep a look. I keep an eye on news that come out on Saturday and Sunday, especially. Like, for example, when Putin says, "I'm going to invade Ukraine" and whatnot. I mean, those evenings were amazing, right? Because there was a lot of volatility, a lot of uncertainty going on. So if you keep an eye on those type of news, you're going to see some volatility. Other than that, it's just boring. It's just,
Yeah.
you're just sitting there and like there's nothing to do. That's why you wait until market hours, because that's when all the volume really is. When you guarantee to open and close position without worry.
Yeah, but there's no futures markets open on like Saturday night, Sunday morning, or anything like that, is there?
no,
No.
not
I
just
think you
Sunday.
can trade. You can trade on Binance if you trade crypto.
Yeah, crypto moves 24/7, 365. That moves
Yeah.
all the time.
I mean, if you really want to trade on Saturday and Sundays, then you got to switch into crypto.
Yeah.
What about
No,
Forex?
No, Forex too. Forex, I think Forex is closed on Saturdays, right?
Yeah, I think it's the same hours as the futures market.
Yeah.
Okay, I didn't know that. Thanks.
Freaking Tesla.
The hammers of back bar. What the hell are those?
Backthar. It's a
Back bar.
it's a Galaxy Quest reference from that movie Galaxy Quest.
Oh, that's right. I too am extraordinary.
Or if you got a chance, check out those beatboxers right there that I just posted from
Oh
India.
yeah, they were on AGT last night.
Yeah, these dudes are freaking awesome, man.
I remember back in the day when I used to DJ, I used to mess around once in a while. I had a nice pair of 18-inch subwoofers. Devin remembers them.
Yes, I do.
Remember when I hooked a microphone up to it and I could make some pretty killer low bass sounds?
Yeah. Freaking making reverberation.
I could go down to 20 hertz. Not with my voice. It was like a simulator throat singing, but it actually
Yeah,
sounded
more
really,
guttural.
really good though. No gutter though, because I wasn't using the sound coming out of my mouth. I was using it coming off of my cheek. So
Oh, that's what you were using the air pocket.
yep. So it was neat the way it sounded though on a subwoofer. Like I could make really low notes, and that's kind of cool. I was watching these guys do it, and I was like, I know how to do that. Well, I know how to do part of that.
Coming back up to a pivot.
That's kinda fun.
4,000 area.
We're hanging
This
around
is,
that 396.50 area, kind of tight, but we've got a nice pennant forming, and this is setting up for a pretty cool measured move. We've got a possible leg to about 397.50 and an extension all the way up to 398.50. Let's see what happens.
I want some red candles.
I know I like being a bear too, but sometimes
Man, I do too, and I hate it because I see the bullish patterns really clearly.
yep,
I see and it's like, damn it, I want to be a bear.
we
Just put a negative sign in front of your chart, and you're gonna see that.
Yeah, I know, that is true. Only on TOS, I think, because it's great.
Yeah, just
it's good stuff.
invert the chart. That's right.
Convert the chart. Boom. You see the.
There you go. You can trade it bearish. All right.
We're gonna see what this one does. This could be like a bear trap or any kind of thing. So
Yeah.
it could be a bull trap. It could be all kind of crap.
I got a nice pennant for me on a 1 minute chart, and I'll watch the levels. Anytime you see any kind of channel pattern, that's pennants, wedges, whatever, throw a regression line in it. You will not regret it. And when you start to see these condense, usually they'll start with a breakout that's about a measured move above the angular resistance off the regression line. So you get about the same size move just outside the channel. It'd be like right up here. So that would put it at 396.92 roughly. If it was to fake out a breakout, that's where it would stop. So you can size a measured move based on the regression line and the angular resistance in any pennant. And at that point, when I say trade the break, I'm not saying necessarily trade the break of the angular resistance, because you can scalp it for a measured move and then take it off if it starts to pull back on you. But you can go and set up the break just outside that channel, and you can know exactly where the momentum is expected to be. If this is going to be a legitimate pattern where you get a bull flag breakout, you'll know for sure on that measured move off the regression line to the angular resistance. That's why we put them there. Here we go, Amazon.
Inverted hammer on the
Amazon. Look at you. This is one of those patterns that at first looks bearish. Call that the rolling top. They look bearish, but they're very deceptive. Knowing where key support is in 2 places will help you trade those the right way. Actually, the control bar's right here. So actually, we could just, you know what, delete this crap. Let's go with just a box.
On the 30-minute, buy that the pre-market VWAP.
There you go. Call this a liquidity box, just like that on a pattern. There's no wick here to really define this. Maybe if we look at the 5-minute chart, yeah, there's one. Look at that, lines right up with this doji, that wick. There's your micro liquidity zone, guys.
Here it goes.
Some will call it a supply zone. From underneath it becomes a supply zone. From on top it becomes a demand zone. So if people are demanding shares, they're going to be like, okay, I want to buy the bottom of this pattern and trade the breakout. That's where you expect it. I'm going to get rid of this smaller box here, but I'm going to keep the big one. This be our educational part of the program here, so we can drop some knowledge on you YouTube folks.
What you gonna give us here?
We know you enjoy us cutting up, but we got to give you a little bit of actual knowledge here. Here's that regression line. Look at this bar.
We ended it with a bullish engulfing on the 2-hour.
Ah, we might. Oh, that's a morning star too.
And a spinner on the 30-minute. Check your 30-minute chart out.
Yep. That's setting up for a measured move, bar, spinner, bar. And this pennant, where it is exactly that. This is your leg. There's your accumulation. A breakout would set up half leg and full leg targets. Pretty simple. It can fail too.
Yep.
We just wait for the break. We trade the break.
You get a big red bar that engulfs that whole green one on the 2-hour. You gotta wait. Gotta wait for it.
So in the 15 minutes, it looks like we might be building a pennant, right?
Sort of, huh?
Yeah.
They got that
But
pivot.
there
pull
it
off.
is. There it is. That move that I've been wanting. Come on, 39.85. Go, go, go.
So just like the rounding top we see here, there's a liquidity zone right in
Yep.
here.
All those wicks. It's just like what we had in that pre-market that I talked about, looking for all those wicks. It's where you start looking for them.
And that's the demand zone, we call that.
Federal
Gee, I
Reserve
need to
Board
rap music
announces
with
Reserve
Wix.
Bank
Wiki, wiki,
income and
wiki.
expense data and transfers to the Treasury.
39.85.
For 2022,
Anybody trade a 3-minute chart?
Yeah, I've been known to keep a 3-minute chart on.
I have a 3-minute chart. I have a 135, and then I have my multiple time frames from 2 hours down to 15. But I keep a 3 on all the time now.
Yeah.
Yeah, only because it's like 10% of the 30-minute,
Right.
and because of the 135 thing, and we see waves of 1, 3, and 5 all the time in the market. So the time frames make sense to me as well. And when you look at them, it's pretty good. You can trade off of them too.
I switched mine to a 2 recently, only because I've been watching that 5-second chart now. And it's just a full dynamic range of a 1-minute chart. It's a double 1-minute chart. But the 3-minute chart's very relevant too, because like you said, it's 10% of the
Yeah.
30-minute. It just depends
And,
on what mood you're in.
you'll see
They're
stuff
all
here.
relevant.
Yep.
They're all relevant.
All
Exactly.
elephant feet, yeah.
There we go. Look at this wick right off that supply zone or demand zone. Sorry, I get the words mixed up, but you know what I mean. Hello.
Know what I mean?
What I mean? Someone said hi to us on YouTube.
Yeah, it looks like a pennant, and you see it also looks like a pullback on the 30-minute if you're looking at SPY, but those candles still have to print. That's why I'm looking at our little time frames to see what they're telling us.
Well, Bollinger Bands are opening to accept a big move coming up here, but look at this. We got a spinner on the low band. If we print a bar back through this this angular here and close it, we're looking for a next candle to start on top of that and bar to the regression line. And if we're going to actually fake out as if this was a bear trap, we're going to see it stack on top of the regression line and then set up for that measured move break out of that wedge. If you fail all that, then you can trust a bear move and you can start looking for it to go into the liquidity zone. So if you're licking your chops trying to be a bear on this, wait, get confirmation first. Just chilling. All right, close you. Open another one of you.
Bum, bum, bum.
Yeah, we're just passing time at the moment. We're waiting, watching the paint dry on a chart. There's your bar through that lower, but it's got to close.
Bum, 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 bum.
Slowly, almost there.
You remember that green range candle I pointed out yesterday
Bam, bar.
on the 5-minute chart?
Yeah, I remember.
Yeah. Look at the 5-minute on SPY. I think today's range candle right now is red
Yeah.
because it has that same geeky look. Sorry, every time I see that thing, I think of Beaker. That candle reminds me of Beaker from the Muppet Show. I don't know why, but it does. And I see a green one that looks the same way, and I'll think of Beaker.
Me.
Yeah, and now Al points those out. Al Brooks points those out as range candles. And I noticed that sometimes they're the opposite color of what you think they're going to be, and it fakes you out. But not anymore.
It's set in the range of this consolidation that we're having right now.
Exactly. So it came at the top of that bull trend that we've had from the opening, and gave us that really big vacuum, kind of pullback, huge. And now since we're 1, 2, 3, 4, 5, 6, the seventh bar.
We're gonna touch it
So,
again.
but it's still in that range. So really, like I'm thinking, there's plenty of trades out there, but I'm thinking, all right, let me see what it does. If it breaks that range, then I'll know, one way or the other which way to go. So now you're looking for a breakout. For me, I'm looking for a breakout of a 5-minute range.
Right. And it's either bullish or bearish breakout. We got a bearish engulfing on the 1-minute chart, but don't trust it.
Exactly, and that's why I look at the larger time frames to see what's going on.
Yep. I mean, we had one back here too, right there. And we had a slight bear trend. We had a measured move down below the regression line.
I mean, like I said, there are a lot of trades. I'm a little bit slower, and I like it. It works fine for me. I'll just move a little bit slow, but I know where I'm going.
Right.
I know what I'm looking for.
Well, I mean, on the fast side of the spectrum, look at this. You got this trend here. You don't quite have the old double bottom reversal as defined as you normally would, but if you stretch it a little bit, you kind of got L1, R1, L2. It trended back up, but look, 8-period crossed the 20. We got bars above, went to the target just like a normal double bottom. This is the trend, 50% retracement right to the middle. Bam, quick target. So that's on a 5-second chart. So that's trading this little range right here up to here off of this spinner at the lower band. And that's why I put the Bollinger Bands back on for a little while. So I like using them as training wheels. They tell you when you're going to get an indecision candle at that deviation and expect it to come back to the central or the middle Bollinger Band, which is a 20-period right here. And then you can trade that on a 5-second chart.
Jeremy, I'm going to post something.
Sure.
It's a diamond thing. Because I'm sitting here looking, you talk about training wheels, and I use those auto resistance support lines.
Right.
Because they're training wheels, and I tell you, they're accurate because they give you accurate pivots and everything. Well, I'm getting ready to show you that. I don't know if you'll be able to see it on this chart, but that big white line, that big thick white line, well, that's the top of my diamond pattern that I drew this morning. And I said, oh yeah, and I extended it. I said, okay, and I said, wow, well, we could hit that range. Well, bam, we hit it, and right below it, it became a pivot.
Yep.
And there's a dotted line that the auto support and resistance is drawing right along that line. So I'm like, yeah, good. I'm getting away from training wheels, but that's how accurate that diamond is, Jack.
Dude.
I drew it and it was ugly on the right side, and that's, well, I really only need the left side. So
yeah, you only need the one side.
I popped it up and bam, and it gave me this megaphone pattern, and boom, it hit it. So cheers to you, Diamond J. You are the man.
And if you're hanging out with us on YouTube Live here, go check out that diamond pattern video that Stone and I posted the other day. That thing is just miraculous how accurately it defines the range of any volatility event. And today we have technically a volatility event. We had banks announce earnings this morning. It brought the market down. That diamond he's talking about was set, and it defined the range for today's trading. Hands down, that is the most accurate pattern for defining a range of a trend or of an event ever. It's 12 for 12. Every time I've seen it lead up to an expected point of volatility in the market on any time frame, it's been dead on at identifying the range without fail.
I would love it.
A little bit more. There's a little bit more.
If it went 13 for 13 on the 13th, that would be awesome.
Technically,
Well,
it did.
Just did. It just did. I'm showing
It
you.
went 13 for 13 on the 13th.
All right, that's the title of the next video, guys.
Now, this is either becoming an imp top or a long pullback.
Well, we've still got that angular there. We still got the liquidity zone there. We've tapped it 3 times from the top here. It's either going to make it or break it, but think of it as if you would be looking at a rounding top too. Sometimes they're very deceptive. They look bearish as hell, and then they surprise you.
That's right. You just said that about Amazon, because Amazon's got a similar look. So
right into that liquidity zone. but
11-11.
Didn't break
Anybody
it.
wants to know?
Yeah. Make a wish.
Yeah, you're funny. You said that. No, but sometimes, listen. There's another way, by the way, to find those zones using wicks. And I'm gonna
Yes.
see on a 1 minute chart. Like I put up a chart a little while ago of that. I don't know if I put in that freaking range shot or not. You do. You got it. But wicks, like you get that high wick, and then you get a low wick when you see yourself in a trading range, and it helps you identify the trading range. So yeah, there's my high and there's my low.
Yes, sir. And the fake breakout thing. So that typically happens when you get a diamond pattern and you can kind of see a little uncertainty in the market doing so. Depending on where in the long-term trend those diamond patterns are, you can kind of define what's expected for the extreme. So like when you see one, you mark the top resistance, not from the candles, but you mark it from where the lines go. So if you're hanging those lines in space to a top where they merge, put a horizontal line there, and whether it's on top or the bottom of the diamond pattern, whichever end is open, where you don't have candles actually touching at the point where they would converge. Let me go to the 30-minute chart. I'll show you what I mean. So looking back at this one here, so we have candles that didn't touch here. All right. Later on, if we put a horizontal line here, and you can just use my cursor for it, you can see the crosshairs there. Line it up. We didn't quite get to that range, but we did break the angular support right here. There's your fake out. Okay. It did end up going to about the depth of the candles in that trend briefly. That's where it bounced. Oftentimes when you get that fake out, okay, this looks like a diamond pattern. Where was it? Let me go to the 1 hour chart. So where was it in the longer term trend? It was after a dip and it came back up. So the idea is some would expect this to be bearish continuation, expecting this to be your leg for a measured move, this all to be your accumulation, as if it's a bear flag and a breakover. That's why a lot of people chase this. Okay. But knowing where that diamond is, you know exactly where the support zone is in it. And if it's going to fake a bearish breakout, this is looking like a bear trap, you'll know it by defining that diamond's range itself. So you know where those lines should have converged. You know there's a liquidity zone here, just below the bottom of those candles. And anytime we mark the liquidity zone, we know where that supply or that demand zone is by looking further left. We can see it has been there. All right. So when it didn't make it there, it looked like it was going to be a bearish break on a bear flag for the long-term chart. The diamond's going to give you whether or not that is going to be a bear trap. And all of a sudden, rip the face off the other direction. Diamonds love doing that. You'll get a fake breakout. It'll look like it's going to take one side, and then bam, it absolutely rips a face off in the other direction. And that's what I'm talking about by that fake breakout. So you simply just continue extending those lines up that trend from the output side of the diamond pattern, and it'll give you the range. Look, dude, it had it exactly. There's your high, there's your low, regression lines in the middle, just like any other channel. We've hit it again, back to the regression line. We're walking into a rising channel now. We know in the long run, rising channels tend to break bearish and retrace 50%. That's what this white line is right here. That's your 50% mark. So if it's going to break bearish below that regression line, that's where we expect it. But the diamond gives you a definition of the range, regardless of where the fake breakout is. The fake breakout is going to tell you, no, it's not going lower. One of the first diamonds I spotted on the long-term trend was back just before, was it just before or just after Jackson Hole? We had a diamond bottom, and it was going into a Friday close. Everybody was chasing it bearish, left bearish positions open over the weekend, and I went flat because I knew it was a fake breakout. And sure enough, the following Monday, it ripped a face off in the other direction, and I was ready to conquer that. I was flat cash at that point. I could have taken the bull side because I knew it was probably coming. Didn't need to because I could ride momentum and day trade this. This, as an example of this is not the same time, but you get a measured move breakout, and this was a 3-legger. Easy to set up. We knew where the diamond was. So you could wait for that opening range and then be bulls. Pretty simple. So you get a lot of information out of a diamond, and that's the main reason why we have been putting out so much material on them, is it tells you exactly what to expect because you know where the defined range is. That's the part that's the most important about it, because you'll also know where the fake outs are going to be.
I had to leave for a minute. I should have announced it. I see something happened while I was gone.
We've been having a lot of that lately. Like one of us will step away and all of a sudden the market will just rip. There we go. Amazon broke that liquidity zone. See ya. Looking at Tesla, probably a 50% retracement going to 118. Okay, I'll start adding. I'm looking at a position here where this liquidity box on SPY is going to be key. But think of one other detail here.
39.85 coming up. 39.85 coming up.
Any channel, whether it's a liquidity zone or not, also has a regression line. Just mark the middle of it. It can bounce here. It can rip down here. So this gives you a trade. How about that 5-second chart? What can we verify?
Yes.
We got momentum. We'll know it on the 1-minute chart.
Ding, 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 ding.
83.25 would be 50% of the 50%. If it's
Ooh,
gonna be
almost
50%.
there. Almost there.
It's slamming into that 20.
Regression line right there, guys.
And a regression line that I have that regression line too. It's slamming into it. Hey, Ricardo, is that a good trade? Damn. Yeah, you're right.
Thank you.
Yes. Very good, Eric. Yeah, you're catching on, man. And that's just the stuff we provide free on YouTube. You should see what we do inside our group.
Okay, so we get one. Okay. Back.
I'm just reading the rest of your comments here. Sorry. You guys watch, and if you're watching the YouTube channel feed, I'm watching the live chat in here. I can read it. Eric W responds, "Yeah, I did see that. That do you have anything to watch for how price behaves when it back tests them?" Thought I heard you say something another day about the fake breaks. Yes, I just went through that. I like the diamond patterns, pretty eye-opening. I'm seeing diamond pattern yesterday, and we just tested the midline of it on the push-up 30-minute chart. Yeah, I've had those same ones you have on there from within the past 2 weeks, and price just stops at the extension lines. Pretty awesome. To your point, we got to the strong bounce today near the bottom of yesterday's diamond. Yeah, exactly. I mean, it just defines those lines. We stopped at the midline of it today. Now, what would you look for? Price to make a new high and be a bull trap possible? Or, yeah, that's probably what we're looking at, because there's a regression line there too. I study Elliott wave theory pretty extensively. I used to look at Elliott waves and fib levels and stuff like that, and I used to be really into it. I got to know a lot about it, and then I forgot about it. I just go and use the old horseshoe and hand grenade trick. I can kind of guesstimate where those fib levels are. I don't use them on my chart, but I talk about them all the time. I know where they are because I can draw a trend line. I can draw a liquidity box. I can draw pivots. So like, it's just one less piece of noise on my chart, but I know where they're at roughly. And that's to the point. Horseshoes and hand grenades, close enough is close enough.
Don't forget nuclear missiles.
Yes, nuclear missiles too.
Nuclear missiles.
So effectively, when you have a defined channel in any regard, you always throw that regression line in there. Why is mine slanted? Oh, son of a gun. I must have grabbed it and skewed it or something. It's supposed to be here.
Okay, now.
Where are we? We got that liquidity box. We went right to the regression line. So either we're still setting up for a bullish measured move, or we break here and we run to the downside.
Right.
And half a channel, you can go in half a channel. There's another line here. I was showing this yesterday with our daily chart. You know, I had this center line for our descending wedge that we're forming on a daily chart, or we've been forming for a long time now. And there's a halfway point. So you can subdivide channels in halfway points all across the board in any time frame. And you know a lot about what you're going to expect for price. So even regression lines have regression lines.
Yep. There's a convergence of moving averages, or I'm just going to call them averages.
Look,
Fixing to happen on a 5-minute.
we're back out of the top side of this liquidity box. There's your regression line. It bounced clean off that sucker. That just goes point and case right there. Predictability becomes easier the more you can see in just a noisy chart. This is very choppy, hard to trade for futures, but it's not impossible. This is what you're trading.
Breaking a descending channel here. At least 95, I would think we would get to. That would be 50% of this channel. 50% retracements. Beautiful.
Yes, we love those. And we used to, Stone and I used to cut up about this.
Stone, you're gonna make me cry. Stop.
They're freaking beautiful because you can make money off them.
You're mentioning the Eric on our YouTube channels, mentioning the 3 and 5 wave that we see all the time on penny stocks. We used to love those because the 3 waves are just glorious. They always tend to fake out a breakout and then rip back to the support level of the second flag. Well, if you kind of just squint right, you can see there's 1, 2, 3 waves in this whole thing. They're subtle. There's no midpoint where it comes to the middle of a channel or anything. But it's the 3 wave. It comes back, tests either previous resistance or previous support of the second wave, and then bounces. Even in this noise,
That's the big thing I look for.
But on penny stocks,
and Stone was. Go ahead, Jeremy. Excuse me.
Oh, you okay? On penny stocks, we see that so often. We know it instantaneously when we glance at it. It's just such a repeatable pattern. They go in waves of 3. 3 usually fails. It pulls back to 2, and then later in the day, it'll hit all those levels you marked out. So, Stone and I used to talk about that all the time.
Stone, am I able to talk about the Jeremy tweezer?
Go for it.
So the Vreeland tweezer. Basically, what happens is the wave makes touch 3 along support or resistance, and you'll see it. If you see a tweezer on touch 3, 5, or 7, I guess. If you see it, but it's more like on 3 and 5, right?
Right.
If you see that tweezer develop on that third touch on angular support or resistance, either way, when that tweezer closes is when Jeremy will get in for a quick scalp, because you get a big bar right after that in the direction, in the other way.
Typically, and almost methodically.
Yeah, and that's what Stone was telling me about, is that you get a nice fat bar after that.
Usually you do, and even if you get a wick.
Usually, yeah.
And even if you just get a long wick, if you have a target, say, okay, I know that it'll at least get down to here. Then maybe go a tick or 2 below your target, away from your target, so that you guarantee yourself a hit. And you set yourself in. Even if it's just a wick, you still get that scalp.
Yep.
It's drawn with a crayon, not with a fine tip pen.
Exactly. And that's going to take me to the conclusion of the point. I love Elliott wave theory. It is methodical. It works very well, but it's not always as clean as you'd expect. I mean, look at this chop. It's hard to even see where the Elliott waves are in this mess, right? Yeah. They're still there. Yeah. What we do is we draw it in a different way, where you can see Elliott wave theory without looking at Elliott wave theory and trade it, because you know where all of the inflection points are known to be. Like here's our extension.
What did Devin just say? We just talked about that little tweezer top right there.
Right. There was a measured move to boot right here on the 5 second.
It would have been a quick, point maybe.
accumulation, boom, full leg outside that.
They're listening to me. It's time for me to go, guys.
Yeah. They're on to me.
I'm
I got to
outta
get
here.
out of here.
George Costanza. I'm out of here.
To the Batcave.
So it's really cool to be able to scalp on like
Love your
any
swing.
time
You're
frame.
Iron
And
Man.
whether you're swing trading, day trading, or trading a 5-second chart, it all works like swing trading. It's all just trading different time frames. You just know
Yep.
where the swings are, where to trade from A to B, and then it's that simple. It's simply defined as a swing. You're trading a swing. So when you see levels and you know where you expect price to bounce off of levels, you just trade from one bounce to the other. You're trading waves, you're trading hops, you're trading whatever you want to call it. You can trade a trend too. But knowing where the expected moves are is the whole point. And that's why we can go and define range with a diamond pattern. That's why we can go and define where a breakout is expected by finding a regression line in a wedge for that matter. I mean, we know, actually this is skewed this way. We know where that line is, and then we can extend them to boot. Out of a wedge, we get expansion. And if this turns into an expansion point, I know this is likely to roll back into that liquidity box again.
Yeah, and those swings happen. I mean, it's waveform, so those swings happen across all time frames, and it goes back to that structure within the structure. And if you know what you're looking at on one time frame, you know what you're looking at on another.
Exactly. And this bounce was clean out of this liquidity box, by the way. As soon as I put that regression line in there, it's like next candle, boom, wicked right to it and bounced. So that's this on a 5-second chart, all right? And this is the top of the liquidity box from mid to top right here, this move. That measured move was expected, very clean. And look, right out of the top of the box, get the bar, doji bar, perfect range. So it's like you can kind of see all this stuff ahead of time, and you can use the different time frames against each other to verify each other. And that's the other point is like when you know where the levels are, you know what you're trading, you can go and scalp every little move on a 5-second chart, or you can scalp the big move on a 1-minute chart, or the bigger move on a 5-minute chart.
Look left, hobbits.
That's it.
Look left.
This liquidity zone is simply looking at, okay, this big wick here, a bunch of orders changed hands really fast. There was plenty of people ready to sell that before, and now they're ready to buy it there. So it's just marking out a box, knowing where the liquidity is. Back to the box. 50% retracement. You can call it any way you want. It's exactly
It looked
tradable.
like a 50% retracement, didn't it?
Wicked just about right to the top of the box, but it also came right to the 50% retracement of this measured move. And again, moving averages, this 200 here on a 5-second chart, relevant to price. Look at the reaction. That's a target. It's a moving pivot. Think of it that way.
Ooh, that looks like this might be a tweezer top on the 5-minute.
You can see the waves easier with RSI. And in fact, for the longest time, I actually used RSI and MACD, MACD, in combination on my short 1 and 5-minute chart trading. But I noticed that all it was is just a distraction for me because it would never give a clean combined signal until I've already seen it in the candles. They're a lagging indicator. And then I discovered fast stochastic. Let me get this to a reasonable size here so we can see stuff. There we go. This is the best of both worlds because it almost leads it. You can see the convergence point. You can see the test. You can see every little detail of when those reactions take place with a fast stochastic because you're literally leading the trend. It's essentially, it's not a leading indicator. There is no leading indicator. You're seeing history. But based on previous price action is what this sees. And when you start to get a momentum boost, you get a convergence and then divergence. That's the signal you trade. Whether it's at the top of the range or the bottom of the range, it gives you a clear signal of when to take the trade. So here was your bearish move. You know, and if I synchronize my pointers here, you can see exactly when that thing took root to a different direction. even on a 5-second chart, and I'm hovering over a 1-minute chart. You know exactly where that tipped over, right on that convergence. And then you just ride the momentum until one points at the other again. There's your exit. Clean signals. So FSTO is much faster than RSI and MACD combined. There's your 50% retracement as well. So like everything points to, if I'm short, I'm closing it here on a 5-second chart.
On a 5-minute chart, you could have got a good little hit
Oh yeah.
if you bought the bottom of that tweezer top.
But I'm at a point where I've started taking subcharts off because I can see it so much easier just by looking at the price action.
This thing is straight walking my star pattern.
Right? That thing is a mess, but man, it makes sense. And that's the point. You can have your chart as nasty as you want, many lines and stuff on as you want. As long as it makes sense to you, you're literally just finding an easier way to see all the different theories that come in, like Elliott wave theory. You've got your retracement
I don't know how you read
rules.
that, Devin.
I wipe it clean when it's not there. It doesn't get much in. So I mark it on the 2-hour chart, and then I leave it alone on the other time frames, and so when I get closer in, there's really not that much happening. When I get more around 2, 3, 15.
Right.
Evan, did you see it on a 5-minute?
Now let me take a look.
Well, I've got to go and let some coffee out, and then I got to get ready to go hang with Creed for a few minutes on MoneyNet.
Yeah, I got to take off now, guys, as well.
Yeah, man.
Thank you for everything. Have a good weekend.
You too. It's great having you again, man.
Yeah, have a great
I
weekend.
just want to point out that Devin made a point about talking about the Vreeland and how when it hits that angular resistance, and you see that tweezer top and it hits angular
Seeing that.
resistance, that you can buy the close of that candle.
Yep.
Well, if you'd have done that on a 5-minute on the MES, you'd have grabbed 6 points,
Yep.
or at least 5 if you'd have targeted the, I have a level 3988. So
And that's a sweet base hit right there too.
and that is exactly what Devin was talking about, and there it is. That's all I wanted to say. Thank
Very
you.
cool.
That's the Vreeland, everybody.
That's it.
Thank you,
See you tweet it.
Stone. I appreciate you pointing at me, but I'm going to point it back at you because we talked about it.
There you go. There you go.
Well, I'll point it back over to Devin. Hot rod. Hot rod.
Jeremy.
So this is our wedge from earlier, and
However-
although that wedge failed, there's a
Yep.
regression line. It converged with the angular resistance line right here where that candle just wicked to. There's your sell it signal. I mean, you can do this 100 different ways and come to the same conclusion every time. It's right on MoneyNet's YouTube channel. They do share these live, so you can go right into that. I tried posting links to it before in here, but then like nobody would look at them. So, but essentially what I do is when I go on with them, I kind of just rehash everything we go through in the morning sessions anyway, and then they had me do a couple of series explaining the wheel trade strategy, and there's just so much more that we go over in our private group than I bring out on them, because I'm kind of limited for time with them. So it's like a 15-20 minute session talking to Creed, but more or less it's just to kind of bring out to our collaborative members just different stuff that we do in the different groups. They're more of a data point or a data house. They have a lot of different data that you can access on their page, and I got a preview of some of it right here. Like I use their news ticker. I'll overlay it on my chart sometimes. I can just watch anytime there's a news article that pops up. It's very, very quick. It gives me some great insight as to, if I see some sort of a downgrade or upgrade or something that pops up right here, and I can go right into the chart and look at it. They're a great data house. They have, a full-on Bloomberg terminal stuff, and it's like very, very, very useful. But me, I trade price action more than anything. So like I can go and listen to anybody chip their teeth and take a quick scalp on a chart because I can see what they're expecting, and be done with it long before anybody has a chance to even finish reading the article, because I trade price action. The chart tells me everything I need to know ahead of those news events.
Yeah, that's the first thing you told that we were talking about back in the day, way back in the day, was that you don't need to go through all this extra work looking for articles.
Right.
The chart will tell you everything you need to know.
It's just a way to simplify it. Like the chart will even tell you, Elliott wave theory without complicating it. You just draw a line, So it's just kind of neat to be able to consolidate all the information you go out and learn, and go get an idea how all that stuff works and how it all affects the market. But then come back and simplify it afterwards. It's like, oh, hey, I've got an edge. I can see this stuff instantly. I can trade a damn 5-second chart, y'all. It's just, it comes to fruition when you get to that point where go out and study, learn how everything works, learn how all the different math formulas work on like different indicators, stuff like that. Go learn all the dope you want on options, and then go and simplify it. And that's just the thing. Like I can go and lock in a 350% return on my Amazon position simply by converting a debit spread into a butterfly. I can sit on that till it expires, and I'm not going to lose anything. I can go and possibly see it trend and make even more on it. So I'm locked in at a profit zone, and if it goes higher, it goes higher. And if it's at the middle of that thing at expiration, an hour before the market closes, I'll make a freaking killing. But it's a free position now. It's beyond free. It's paid me. So I can go and talk till I'm blue in the teeth, or long in the tooth, blue in the face about options and stuff like that. And there's 150 different things I can talk about in the span of a day here at Bullish Bears that I can go into details on. And I give them a little piece every now and then. So that's the whole thing with Money.net is I go out there and just give them a little taste of what we do with options.
Jeremy, I'm going to call it blue in the teeth from now on.
Okay.
I'm going to talk until I'm blue in the teeth.
Until I'm blue in the teeth. That's a good one. I like that. But yeah, that RSI cycle does work to some extent. I used to use it. It never served me wrong. I'm just saying there's easier ways too. Anyway, I'm going to sign off the YouTube channel. I'm going to go let some coffee out, and then I'm going to take a little break, go hang out with Creed at probably about noon. If you guys want to check that out, it's right on their YouTube channel, Money.net. Check them out. We'll be live there soon. And I'll drop a link to the channel in our Discord server and throw that down too. But long in the face, yes, that's a good one too.
I'm feeling very long in the face.
Talk to long in the face.
That's great. I love it.
I may get my words mixed up.
Long in the face.
I may get my words mixed up, but man, that chart.
Come on, it came out great. No, the words mixed up comes out great. It wasn't bad. I love it.
It comes out great anyway. It's funny, and we love funny.
Because it is funny. We like funny.
Exactly.
So I got business things to do. I might not be on later. But I'll try. Otherwise, have a great weekend, guys.
You too, everybody. Have a great weekend out there. And, dude.
Y'all have a good weekend.
Stone and I, if we can, we'll get together. We'll do a quick piece and just maybe a comedy piece. And be like, hey, on Friday the 13th, the diamond pattern went 13 for 13.
Well, it did. And it was my diamond that was the 13th.
That's right.
Listen, I'm going to tell you, we closed the gap. We opened the gap on the 1 minute chart, and then SPY came back down and closed that gap. And then it created another gap in the same area, came back down and closed it again.
Oh,
so
yeah.
just this is one of those spots. It's got to do something.
We're back in the liquidity box. We've tapped it for the third time with a wick at the regression line. Now what?
Right here below, right by VWAP.
But anyway, I still got to end the YouTube feed. See you guys.